Greetings traders, my name is Timothy Hellberg. I'm a professional trader since 12 years back, and today I'm bringing you a market report in collaboration with IMGFX, the people's broker. But before we do, let me just remind you that this is not a recommendation to buy or sell anything. If you want to pause and read through the full disclaimer, you can do that, but easily summed up, you should always do your own analysis and not trade on what someone else says. This is just made in pure educational purposes and just me using my plus 12 years knowledge of the markets to give you a little bit of a roadmap for the upcoming week, and hopefully you can use that for your advantage. If we take a look at the agenda for today, as always, we will start with the economical calendar, talking about what events we are looking at next week to keep an eye out for. We'll talk a little bit about market sentiment, so the current risk on or risk off mood that we have, current and potential shifts to look for. And then we'll talk briefly about last week's calls, the calls that we made where gold outperformed and we had some tricky entries on the other trades. Then we'll talk about Bitcoin that is currently finding an air pocket. We'll talk about the gold that has a shiny line in the sand that is important to keep an eye out for. And then we'll finish off by talking about just pure trade setups on dollar yen, where we are looking for a break of structure. And we'll talk a little bit about silver, where we are looking for a daily close to trigger a long trade. So let's jump right into it, guys. So if we start by looking at the economical calendar, Monday starting off pretty slow. We have Bank of England Governor Bailey speaking, which can be interesting. As you know from last week's report, pound is on the watch list at this moment because we have an issue with stagflation in the UK, and the Bank of England has acknowledged this issue. So any type of comments on that can obviously move the pound, but also the risk mood in general at this point in time, because the world is becoming very, very concerned in terms of stagflation and slowing growth around the world in combination with high inflation numbers. Tuesday, as we've talked about before, the market is still focusing a lot on inflation, so all of these PMI readings for the euro, whether it's French, whether it's just for the eurozone, whether it's for Germany, everything is important to keep an eye out for. Same for GBP later on. ECOFIN meetings, worth just keeping an eye out on any headlines coming out from that. Then we have PMI for the USA, which is also something worth keeping an eye out for. Then we have Fed Chair Powell speaking, once again worth keeping an eye out for, and Lagarde speaking. So it's a tricky one where it's not the clear cut, if the figure is higher or if the figure is lower, then you trade this or you do that kind of data releases. It's more giving you a general idea of what the current consensus and the effect on the overall risk sentiment is. Big release for the Kiwi during night, monetary policy statement, rate statement. We talked about this before. Interest rate decisions are the largest ones in FX. Once again, people speaking, important to keep an eye out for. Durable goods, not super important. FOMC meeting minutes, obviously very important. FOMC member Brainard speaking, also very important. Then Thursday, expect a little bit of a slower trading day because we have a bank holiday in some of the largest economies in Europe. So expect the markets to be very slow until the United States comes into the session in the afternoon European time, where we have FOMC member Bullard speaking. Important to keep an eye out for any comments that can take the market off guard, and core PCE price index. So with that said, we're gonna jump into the market sentiment part of this video because I want to talk a little bit about that. So the reason why I'm highlighting all of these talks where people are from central banks, etc., are coming out on the wires talking about the economy, etc., is that we are entering a new, rather unique market environment where we have this issue with high inflation in many countries and many economies. But at the same time, we are seeing growth slowing. which is a different combination. So the problem with that is because when central banks are looking to raise rates, they're doing that to slow down inflation, but by doing so they generally also slow down the economy, because the cost of money becomes higher, and if the cost of money becomes higher, it's harder for companies, etc., to grow at the same pace as they would usually do, because everything becomes more expensive for them to do. So usually raising rates will slowly drive down growth. Now the problem that we are having right now is that inflation is running so hot that central banks are raising rates at a tempo that is just, pretty insane. And by doing so, we are starting to see signs that growth is actually slowing. We are seeing earnings, etc., coming from the United States, where growth is really where the earnings are not good in terms of the companies. So this is kind of huge for the market. So if we take a look at the VIX on the daily chart, we are still at these elevated levels. We are bouncing just around the 30% level, which is the sort of the line in the sand for determining it to be higher volatility. So the market is nervous. The market is not liking this combination of slowing growth in combination with high inflation and central banks, running out of power. So we are at a unique situation. Risk sentiment is poor, it's bad. What could calm that is if we start seeing some good earnings numbers from large companies around the world, if we start seeing economies getting inflation down, but at the same time getting growth going. So it's really, really tricky, and in terms of sentiment, I don't see it changing very, very soon. If we take a look at S&P, which is a good gauge for risk mood in the world, we've talked about this before, that in last video, that when the S&P breaks the 100-week moving average, it usually makes a run towards the 200-week moving average within a couple of weeks, and it has happened many times before, as you can see on the chart. So we are not really moving at the same pace yet, but I don't really see a buyer's market at this point in time in the S&P. I'm seeing the S&P making a run for the 200 weekly moving average before it makes a run back to the 4420, because 4420 is the line in the sand that we kind of need to take over for me to have a bullish bias on the S&P again. So the S&P looks very heavy, and in combination with that, risk mood looks very, very heavy. So it's not looking good at all for risk sentiment with everything that's going on. So usually you would say that rate hikes for an economy like, for example, the UK, where they hiked rates, you would say that that's good for the currency. The currency generally strengthens on that. But what we saw last week was a spike in the pound's price, then to just return lower. And that comes from this, that the market is looking at, okay, they raised rates, positive, you see some buying in the pound, especially algos, but then you see it reverse. Why? Because they are seeing huge indications that they are getting stagflation, meaning extreme slowing growth in the UK, which is very bad for the economy. So instead, even though they hiked rates, the currency actually weakens. So it's a bit of a tricky macro landscape right now, but it's worth keeping an eye out for. But risk sentiment poor. So if we look at last week's calls, we had gold outperformed and we had some tricky entries. So if we start with gold here, I'm gonna put up a trade that I took on the screen. So it's actually the one that you can see here. This sort of red zone right here, I had highlighted on my chart. And any type of daily closes above that zone had me looking at, I talked about last week that gold could maybe be the falling knife that you wanted to try and catch. And this was the area of interest for that. So we had these daily closes that were not closing below this area, which finally made me actually pull the trigger on a long trade. So I entered, and obviously I could have rode this much higher, but I didn't, because due to time issues I couldn't be at the charts, I couldn't be checking my phone, so I had to move away and just close the trade, but it still was a good profit. So if you took gold last week, that was a home run, and you could probably have held it much. I just had almost 1-to-1 risk reward ratio on mine, but if you held it for the whole week, you could have at least squeezed out a 2-to-1 risk reward. So we also talked about euro pound, and this is where it gets a bit more tricky, because we got down and we triggered that area of a potential long bouncing on the adaptive moving average, but we had such a big spike that you could have easily been taken out here, depending on where you had your stops. If you didn't, well, you could have gotten a small profit out on it. So it's a tricky one. It depends on how you manage that trade. I never took it because I didn't like this spike here. That was not something that I like to see. And at the same time, it didn't get low enough for me to want to try and find an entry against this structure and this support around the 200-day moving average. So no trade for me there. If you took it, yeah, you could have made some money, but it's not a clear-cut one. The other one we had was pound yen, which once again was a very tricky one, where we had this big spike in the early of the week. So depends on where you took the trade. If you had the balls or the vision to try and short it towards the adaptive moving average instead, well, yeah, then you could obviously have really taken a good trade against the highs. I never took a trade on this one. The price action was too aggressive for me. I didn't like the daily closes, but like I said, if you had another entry criteria and you shorted it against the high regions, then yes, it moved lower for the main portion of the week. It just had a good bull run in the early week. So the only trade that I took was gold, because there I had a clear-cut entry and that worked out fine. The 2 pound trades, I didn't have a clear-cut entry, so I didn't take them, but that doesn't mean that you could have made money on them. So a bit of a mixed bag, but it depends on how you manage your trades. So looking at this week, if we jump into the Bitcoin chart, if we take a look at BTC USD, as we always do, BTC is kind of in a air pocket at this time. So this blue line here is the line in the sand at this point in time for Bitcoin, 28,557.58, around that level. As long as we are able to keep above that, yeah, I don't see it flushing to the downside. If we start breaking below this and maybe even get daily closes below that, then yes, it will be like pulling out the rug from beneath the feet of the price for Bitcoin, and we could easily see it. You know, I talked about this last week. Now, would we get that? Not necessarily, but the statistics are telling us that the 99.82 level could be on the books. I don't necessarily see that, but it's there. Next up, we have gold, and here we have the same thing that I talked about when I talked about the trade that I took. So the level of interest here is this red region. So basically the level between 1815 and say 1808 approximately. So around these levels, it's as long as we don't get a daily close below that, I like gold moving higher. I think gold could make a run towards the 1880, 1878, somewhere around here. So depending on where you get that entry and how far it actually runs, there is a trade to take here. It's just not that clear cut on the chart. I think you have to go down on a lower time frame to find your entry trigger, but now at least you have support of the 200-day moving average also on the daily chart, so you could get a tight stop in there. But I like gold higher as long as we hold above the red zone, and it's just a matter of finding that entry on the lower charts. Because if we also take a look at dollar yen, so dollar yen is a trade that is supported by both technicals and fundamentals, but we are looking for a break of structure. So we've had this bull run with higher highs and higher lows, and now we are kind of moving away from that. But until we break this low right here, we don't necessarily have a lower low. You could argue that this is the lower low towards this, yes, but I don't think we'll see this really moving until we take out this red area right here. So it's a little bit like the same as gold, but a different structure. I'm looking for a daily close below this red zone on the daily chart. If so, I think you can get a good short entry on dollar yen, and we could target this previous support area down here that will by that time coincide most likely well with the 100-day moving average at least. So and that's a 3-to-1 risk reward. So if you can get that trade, obviously that's good. So looking for that trade on dollar yen. Also, you have the support of the US dollar having been very high. This is overbought. We have pulled back a little bit, so I don't think it's completely unreasonable seeing the US dollar pulling back a little bit before moving higher based on just being overbought. So add to that, the yen doesn't have the same macro issues as the rest of the world. So obviously the yen isn't necessarily the most growing economy in the world. If you're into macro, you know why I'm laughing and saying that, but easily explained, they don't have the same issue as many other big economies have right now, with inflation running wild in combination with growth slowing. So from that point of view, adding that it's a safe haven in the current risk sentiment, I think that there is a case for the yen getting a little bit stronger over the near future. And if we see that with the dollar coincidentally pulling back a little bit with being overbought, you have a short trade on dollar yen, as long as you can get the entry from a technical perspective. Same thing goes for silver. So we are looking at the silver chart. We want a daily close with above the break of structure. So this blue line right here at 22.13 is actually considered on the 4-hour time frame. It would be, if we can get a peak above that, a close above that, that would be considered a break of structure in terms of an ABC pattern in this previous one. So basically an indication that this price is reversing and we've found the bottom. Add to that if we can see some consolidation around this level, then we actually have an inverse head and shoulder pattern also forming on a higher time frame that could also indicate silver taking off to the upside. So it's like we talked about before, it's valued in the US dollar, so the US dollar can throw a wrench into this setup. But if we can get a daily close above 22.13 and or a combination of this head and shoulder pattern forming, I really like silver to the upside, maybe even more than the gold chart at this point in time. So silver has a tendency to move very aggressively also, in combination with sell-offs in the S&P 500, and as you know, I showed you the S&P in the beginning of the webinar. So a lot is talking for silver to move higher. So from that point of view, I think it could be a good trade if we get it. It's not quite there yet. But that's everything from me this week, guys. If you enjoyed this webinar, leave a like, leave a comment. If you have something that you want me to talk about in the next week, I will do that. Until then, I hope you guys stay safe. I hope you guys make some money. I hope you all have a green and profitable week. Bye bye, guys.